my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A second bearish black crow on Friday, but it can also be seen as an indecisive spinning top. And if it wasn't for the 1 cent difference, it would also have been a daily key reversal down. But the market didn't quite make it. This action also follows on with what had been a 2-day tweezer top. Another interesting point was the base of the action was the lows on top of the March 2012 high at 120 even. This March 2012 high is part of the congestion zone between 120 even down to 115.70. Overall, until Friday's action, the market had continued to move up and away from 2 descending triangle patterns formed since March. Potential targets on the upside for these descending triangles, as well as the double stroke triple bottoms formed over the same period, are as follows. For the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a primary target X3 in the 120.5 area, which was 2 weeks ago filled, and harder to get secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all of that. The next significant resistance is the April 2012 high at 125.96. So far today, a little weaker to start with, which only became even weaker as we progressed. Prices have punched down through the May 2012 high, and we're on their way down to the next level, the 2017 high at 119.19 before pulling back up to the May 2012 high. Spot gold, a big key reversal up on Friday, with the low of the action based on the broken middle time, currently 1831 of the early March to late April bearish Andrews pitchfork, along with a lesser Fibonacci level at 1826. Meanwhile, the top of the market was capped by the 50% Fibonacci line of the March 21 to March 22 move at 1873. Prices pierced this resistance but closed below it. Additionally, the huge size of the daily key reversal up meant that on its own it had created a weekly key reversal up as well. Now further above we have the declining short medium moving average, currently 1887. Then the flatlining medium moving average, currently 1892, and the upper time, currently 1902. I repeatedly said in recent times that this market is very much like watching someone treading water. A lot going on but going nowhere. Well, this may be the first sign of all that agitation, all that movement, may be having an effect. Housekeeping point, as any regular listener or viewer will have noted, I have been trying to retire the broken early March to late April bearish Andrews pitchfork for a while now. I had not, purely because I was not happy with any of the replacements. However, the move on Friday gave me the opportunity. Thus, I have retired the bearish Andrews and placed it with a shallower bearish shift pitchfork for the same move. And so far today, well, a higher open, but then a pullback down, all the way down to where we were trading before Friday, towards the long moving average below, currently at 1843, and looking very much like a bearish dark cloud cover pattern, possibly a bearish double as well. We'll see. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.